What's up, traders? It's that time again. Weekly levels. Let's find some opportunity in all the major instruments we want to trade for swing trading and long term. We're going to look at stocks. We're going to look at crypto. We're going to look at commodities. Let's find some money. Let's start off first with a quote by Jesse Livermore. All through time, people have basically acted and reacted in the same way in the market as a result of greed, fear, ignorance, and hope. There's a lot of two of those things going on right now in crypto, which is what we're going to kick off with right now. There's a lot of fear and a lot of hope going on in crypto right now. I know anecdotally, and I'm sure the fear greed index tells you the same. Bitcoin, as I've been looking for several weeks now, has been holding a support level from the COVID low up to the all time high, which is also the weekly Ichimoku cloud. Bitcoin has held about the 36,000 level. But on the upside, it has also been maintained by a resistance around 45,000. Now, if enough time has passed, and I've been looking at the Ichimoku cloud on the daily for all these weekly videos, if we were to get a break of these highs that we established around 45,000, that would actually potentially set up a bullish trend to break out to the upside. But right now, we're still caught between the supports and the resistances, 44K and 34K, let's call it. If we break to the downside, well, that then sets up a bearish trend. So Bitcoin right now is caught in the middle of a consolidation, and which way it goes is really going to dictate the way that crypto goes over the next several weeks and months, potentially. Ethereum is looking pretty much the same way. It is also holding a COVID low to all time high support at about 2,400, but it too is being caught on the upside. But just like Bitcoin, if we can break these highs, if we can break above 32K, 3,200, excuse me, it can trigger a bullish trend. That's what I'm watching for. But right now, still caught and still has a bearish sentiment. Another one that I wanted to look at for some friends of mine, they're very interested in it, is Solana. Solana has been trending bearish for quite a while, but it finally found some support around the 80 level. Here it's holding, but it is set up a clear level that it must hold. If it breaks 80, then I could see this thing continuing the trend down probably to 40. So I would be very, very careful that it does not break the February 24th low, because this thing could probably get cut in half as it enters the uncanny valley of risk. So that is crypto. And I'm going to release a video this week talking about the crypto winter. Now, I've lived through a few of these crypto winters. There's been at least four of them in the last decade. And how you survive them is you have to think differently. What I've been trying to tell people to do is look for opportunities in the cross pairs. We like such as Ethereum, Bitcoin, Solana, Bitcoin. You don't have to sell your cryptocurrency, but you do need to have an account on an exchange where that you can enter into a margin position to hedge against your existing exposure. I know that's kind of complicated. That's why it's going to have a whole video dedicated to it. But we have to look at the Bitcoin dominance chart. And this tells us basically that the Bitcoin market cap dominance is trending upward. Bitcoin is the safe haven asset among the cryptocurrency space that traders tend to go into in these bear market cycles. It goes down less than all the other more volatile pairs. So, given that thesis, if you don't want to, let's say, sell your Ethereum, you can open up a short position in Ethereum Bitcoin cross to benefit from this Bitcoin dominance as Bitcoin relative to Ethereum increases, which is the reverse of Ethereum Bitcoin. Ethereum Bitcoin, because of the way that the pairs are arranged, left, right, Bitcoin dominance means that it goes down. So be looking at that for opportunity. Okay. Now, another cryptocurrency we want to look at is the dollar, the US dollar. And despite all the concerns about the Fed printing their hearts away, What's interesting about the dollar is it has actually begun to break out to the upside. It has been caught in a consolidating trend. This is the DXY, by the way, which is the dollar index. It's basically the dollar relative to all the other world currencies, mostly the euro, but it's all aggregated into an index. It was holding between 97 and 94, but you can see it's breaking out to the upside. This is not what hyperinflation would look like. People around the world want dollars. The demand for dollars is going up, as opposed to the narrative that inflation is going to eat away the value of the dollar. Well, every other country is printing too. And so, relative to their own currencies, they'd rather have US dollars. That's the trend as it stands right now. I would expect it, let's see, it's trending on the weekly. Let's see, where could we go up to? Well, it could very easily come back up to 100. So, again, caught in a multi-decade range or decade range here from about 2015 to 2022, but it has some more upside to go before it hits some resistance there. So that's the dollar. Let's look at the stock market. So, been talking about this for several weeks. We've been in this correction cycle, and finally we got a false breakout on the 24th, which I talked about last week. This is key. This is key, key, key. Both the S&P 500 and the Nasdaq, we're looking at the QQQ right now, did this same sort of pattern. And over the last week, it came back to test what I see as an entry level for this false breakout more than once. On the QQQ, that's about 337. On the SPY, that is about 429. And so Friday, we had another retest of that level. I don't know how the markets are going to open up today. Price of the stock market indexes could play around for as long as it wants, but as long as it does not break the February 24th low, I think you have to be long. I think you have to assume that this was the correction that we see once every 2 years, and that was it. Again, if we break the February 24th low, that changes. But for now, I want to get long and stay long, at least back up to the all-time high, and then we'll have a different discussion in these videos. The big movers over the last week have, of course, been oil, which, if you go back through my videos, you saw that I have been eyeing 100 as a potential resistance level. And, well, just like most anything else, if you set a target on a bullish trend, sometimes it makes you wish you had a bigger imagination. I do expect at some point us to have a snapback, but I think a lot of people are trying to short oil already. And me, myself personally, I'm looking for some sort of reaction level, some sort of dip down, give it a little bit of time, and then maybe take a pullback for that reversal. The same thing's happening in wheat and corn. They've been going on a tear. And I think a lot of people are seeing that and they're saying, oh, well, I got to short this. Be careful. It will come down, and it will probably come down quickly, but you just don't know from what point. So be very, very careful in these. But definitely the commodities are trending upward right now. And I'm going to do another video this week about sector rotation. We need to look at that to see where we are in the economic business cycle. It's given us pretty clear signals, but we'll talk about that this week. So end on the VIX. Okay, so the VIX is something else I wanted to talk about this week. Normally, the VIX has a sort of spiky tendency. In other words, if we go back in history and we look, the VIX, even in periods like the COVID crash, it either does one of two things. It either goes up quickly or it comes down quickly. Now, you'll see some hesitation and some slowdowns until, and especially when it gets down around the 10 to 15 range, it definitely starts to go up and down. But what the VIX is doing right now is very unique to me in my experience. When we had this correction back on January the 24th, we saw a normal fall off of volatility. I frankly thought that that was going to be it. We were going to come back down into the range of up and to the right on the stock market, low volatility. Instead, we got the Russia invasion and volatility went up. Now, there was a divergence because if you remember on the stock market on February 24th, it broke the 24th of January low. So we had a lower low on the stock market, but on the VIX, what would normally happen is you would see a higher high on the VIX if you made a lower low on the stock market, but that didn't happen. It was actually a lower low on the VIX, which is, a little bit of an interesting discrepancy. Gives you a little bit more of a bullish sentiment. But then following this fall off, if you notice, the VIX has been slowly trending up as much as the VIX can trend. It doesn't trend. It tends to go up and then quickly go back down, but it's not coming down very quickly. Instead, what you have is higher lows, and with the exception of the February 24th, higher highs. It's created a sort of upwards moving channel, which, frankly, is not something I'm used to seeing. What this tells me, well, the VIX, volatility is going up. I really don't have a signal here. I just want to point out that it's odd in my experience. Maybe in the future it'll mean something to us. We can come back and we can say, "Ah, the VIX told us this." But right now, I'm not going to make any suppositions to it. So, individual stocks. Let's touch on. Oh, before we do that, commodities. Silver. Silver this week. Now, normally I am I kind of poo poo silver because, or any other commodities like silver and gold. I think that gold, people were looking for it to do a breakout on the Russian news. Looked initially like a false breakout on February the 25th, but slowly it's been trending back up. I actually like the breakout on silver because what silver has done is come back to a retracement, basically a 6 month, almost a year long retracement level where you have some inflection here and price got above that retracement level, pulled back to it. That's about 25 on the futures, on the silver futures, of $25 an ounce. And now it's starting to break out. I actually have a long silver position on to express this breakout. That's very unique for me. I normally don't take any precious metal plays, but I happen to like the setup. It was mentioned by a member of my Discord that I happen to respect his opinion. And if someone points out something that I like on Discord, I will take it. And by the way, that's a plug. If you just want to join a trading community that doesn't charge to be a part of it, then check the links below. I just want to talk to you and have a conversation and share ideas because I can't look at everything. I want to see what everyone else is trading because I might like the setup. As a technical analyst, I believe that the price chart and the patterns it makes should be independent of whatever instrument you're trading. You can find opportunity in anything that moves. All right. So now that we're done with the plug, let's talk about individual stocks. Apple, pretty much the market. The S&P is so dominant. It's doing basically the same thing that the S&P 500 did, where on the 24th we broke the January 24th low, the February 24th low, broke it, but it actually came to a 50% retracement level and pegged it and went off. That was a really good touch. I didn't get a chance to get any Apple at this point because it was such a busy morning, but there's your support. It's pretty clear. And again, it came back to what I would consider to be an entry level, again, on Friday of about 160, 265. So that's going to be the line in the sand right now for Apple going into this week. Google, I did happen to pick up more Google when it pulled back. I like that it held right at the 24th, the January 24th to the February 24th, held that level. That's good. And again, it pulled back again to a nice secondary entry. I think some members of the Discord caught right here about 26.16. So that is the trade going on right now in Google. And of course, they have a split coming up this summer, which in the past, splits on major stocks have led to a sort of rally going into the split as people are, I'm not sure exactly why people do it. It just happens. That's why I'm looking for it in the future. Google, in addition to being one of my long term holdings, is one of my highest confidence trades of 2022. So there's that. Facebook, which I know a lot of people are watching, is still within this uncanny valley of risk. In other words, people that bought it thinking it couldn't go lower are sitting here at about a 15% haircut on their capital, not being patient. It's actually pulled back to what I would consider to be a nice reaction level on Friday. We have this bump up on the 24th. It creates a sort of a little zone of, let's take this off so we can see a little more clearly. So we have these 3 bullish days, which create at least some kind of a sign of bullishness. And then it pulled back to the level, held it. Friday closed below it. It's not really what you want to see. But if you had waited and gone long at 200 or 201 in this case, I wouldn't have been mad at you. But you got to bear in mind that if you break that 24th low, just like with the rest of the market, watch out. So, Facebook, not mad at people for trying to buy the dip now after being patient, but mind where your risk is. The big winner this week, I want to toot my horn about, is waste management, which I was able to pick up on the 24th low. And that was, of course, at a 50% retracement level, right there about 138.65. And it also set up a false breakout spike. This is going to be a textbook trade for me, where you basically over the last the weeks prior, you set up a little level of support. Let's just go through this right here. So we're looking at waste management on February 14th, Valentine's Day, to the 23rd. And then on that crazy morning on February the 24th, that Thursday, boom, comes down, triggers an alert for me. It's at the weekly level. I like it. It gives me a good risk defined entry. I know my stop is below the low, and upwards we go. It is a waste management, is a waste disposal company. If you ask me why are waste disposal companies going up, I would say it's a sector rotation into defensive plays, that being utilities, which this is. And again, that's another topic of the video this week. We need to look at sector rotation because we're seeing a lot of money move into defensive plays. This is sort of a lagging indicator now, but it does tell us what the market participants are seeing in terms of, are we at a market top? That's coming up this week in some semi-scheduled videos. So be looking for opportunities. Once again, if you want to share your opportunities and get these trades in real time as we're taking them, just join the social media. I'm not really shilling anything. I'm not charging for it. I just want to have a conversation with traders. So have a good week, everybody. Trade wisely.